Happy holidays and good evening, everybody. This is Jeff Scott, and welcome to this week's installment of my weekend review. For those that are new, welcome. For those who've been here for a while, I'm going to continue on with my attempt to keep these less than an hour. In fact, today, 30 to 40 minutes is probably what I'm shooting for. For those that go through this and find the jargon hard to keep up with, I will be posting on the board sometime within the next week a HGSI Basics webinar so that you can get an idea of what some of these different indicators mean and how we use them. My contact information is here. I'm going to change the distribution schema up a little bit this week. For those that are watching on YouTube that are complaining that it's blurry, I will be posting a link with Dropbox to a number of boards. If you don't get, as part of those boards, that link, email me. I'll send you a link and you'll be able to download or watch a high-definition version. I've entitled this as Santa versus the Fiscal Cliff. I don't think I need to tell anybody why, but clearly this will be an interesting couple of weeks. Congress is out for a while. I think they're incentivized to come back and pass something that, at least at the $250,000 range and below, will prevent most of the cuts from expiring and extend unemployment. There are some major changes that will kick in with sequestration, where they have identified a number of cuts, mostly in defense and some in healthcare. Frankly, some in healthcare are pretty draconian, although it doesn't sound like that when you read through on the top line. And I think there's a generalized desire to avoid much of that in Washington. That said, we've seen over the last couple of years that the right and the left can't even find anywhere in the middle to agree upon. Now, I will tell you that I've had a little bit of experience in this, and that experience has been around a medical rule called sustainable growth rate, where every year there's threats of cuts in physician reimbursement, sometimes as high as 28%. Several times the medical world has, quote, gone off the cliff to be saved in January with a legislation that goes back to the beginning of the year. So sometimes I wonder how much this fiscal cliff stuff is a product of CNBC and the press. Whether they fix it in the next 10 days or in the first 3 weeks of the year, it probably in the long run won't matter much, and I'm pretty convinced that as they've done in healthcare with the sustainable growth rate, it will be fixed. Disclaimer, this isn't political. That's the end of the politics. This is for educational purposes only. Any recommendations that are made are in the spirit of education, not investment advice. I'm a physician, not a broker. Most physicians lose money with their investments. And I do this as a volunteer. I don't work for or own any software vendors. I make no money on your purchase of anybody's tools. What I need on my desert isle besides high-speed internet, I need something to trade with, and I can do most things with either TradeStation or Thinkorswim. I paid for some specific programming in TradeStation, so I'll probably be holding on to that for a while, but increasingly I like the stability of Thinkorswim. I need something to analyze this market and stocks after hours, of which I use High Growth Stock Investor, which we'll talk about throughout the evening. I use EdgeRater to get a sense sometimes of what the market is doing, as well as to backtest. I use seasonal analysis programs, my favorite being Magenta Trader, and then I'm a strong follower of the different products of Ian Woodward and Ron Brown. I'm not going to spend any time here. I've done it before. You have to have your own discipline. My discipline has been built by a number of influences. Most of them people I've read, some I've been to live meetings with. These have created my own brand, and my brand of doing things is based upon how I've synthesized these folks and others. I'll talk a lot about a buy list. I have no idea what I'm doing tomorrow. How could I? I don't know what the market's going to be like. Obviously, it's down right now, and if that be the case, it's hard for me to believe in a falling knife market that I'll go long, although if it's like Friday, it may set up a great buying opportunity as it bounces off the opening lows. So all I'm doing is identifying stocks that are attractive for a long or short position and things that I'll be following when the market opens. I take that buy list and I do some automated trading using some tools from MarketGauge.com and Never Lost Trading and others within Thinkorswim or TradeStation. So if I say it's in a buy list, it just means it's interesting. It doesn't mean I'm buying it. As usual, I focus on top-down investing, which is what is the market doing. I look at the industry rotation in stocks, and then I may talk about shortcuts and integration depending upon the time, and I really don't want to go beyond 9:15. Here's Ian and Ron, the secret weapons for what I've learned with high growth stock investing. They have a live meeting. The next one is in March, I think around the 24th. If you go to www.highgrowthstock.com, as you can see here, and click under products, you'll be able to read about the seminar. In addition to the seminar, the software offers a free trial, no credit card even with the data. Ron does a number of free recordings, and the website is right here. On that note, enough of the introductory material, and let's take a look at the market. I like to review the market that was, and even though there's a lot of negativity floating around about the fiscal cliff and impact on the market, it was a pretty good week, or frankly, for those that were here last week, a very good 2 weeks. If I pull up my group performance analysis, which is, I derive this from highgrowthstock.com, and I look at from end of day Friday, which is a little bit different. I usually look at Monday morning, but I decided to mitigate the role of gaps, and I looked at it both ways. There wasn't a big difference here. And I look at those that closed at the end of day on Friday this week. You get a true representation of things at the market close from week to week. I look at a number of different watch lists that I put together, and I try and get an idea of bullish or bearish market, what's working, what's not working, how my current stocks that I owned, this is before money management and trades, at the beginning of the week, how they fared with the market as a whole. So the first thing you notice is that most of the different watch groups that I follow, which include some bearish ones, were up for the week, with only two groups, our TM7, which is a search and omni trader, and the Tim Hickenfelder and HGSI were the only ones down, and you can see they didn't represent a lot of stocks. The S&P 500, which is my benchmark that I follow, was up 1.17%. So despite all the hype, gloom, and doom, this is another week, it was up last week as well, where there was a positive return for the market. If I look at the buy watch, the stocks that I picked last week, going through the same type of example we're going through tonight, I was up over 3% with 16 to 10 winners versus losers. The types of stocks that did the best were those that pulled back. If you think about pullbacks and those on the squeeze filter, which pull back to major moving averages and pop like the spring, those are the ones that did well. In fact, my group of 8 pullbacks ready to run, which, as you know from being before, are my favorite type of stocks, really outperformed the market at over 6%. The top stock search, which had one stock last week, which was Sylvanian, was up 32%, not too shabby. Bottom fishing, there were no stocks last week in the group, and those stocks that were leaders did not outperform. So we have seen a scenario, and I think it's related to the fiscal cliff, frankly, where some of the stocks that have been beaten up are doing better than some of the stocks that have been leaders. And I blame that to some extent. Perhaps some people are holding their losers because tax losses are worth more, most likely in 2013, and they're selling their winners to avoid paying higher taxes in next year. So that feels like a pretty good week. And in fact, if you look at, and I'll just look at my performance, 2.16 versus 1.17, and I look at a Monday to Friday view, desktop. You won't see a big difference, 1.81 versus 1.11. So it does make a small difference when you compare Friday to Friday or Monday to Friday, and the difference really are gaps that might have occurred one way or the other on Monday. So that's how I felt from the overall market. You can see pointing up. Now, I remember sitting at this very desk with this very view, this outside my room in my home office in Manhattan, and I noticed on Thursday evening that the future markets had a bit of a drop. And let's see if I can't show you what I'm talking about. Here it is. So the market closed on Thursday, and then sometime around 8 o'clock there was an announcement. Here's the market close on these red hash marks. There was an announcement that the Plan B, which frankly the President had already said he would never sign, did not make it out of Congress and did not, or out of conference or out of committee. It was not going to go to a vote. And you could see the flushing sound of your portfolio with the market doing a dramatic pullback. And in fact, see if I can see it better in TradeStation. It is TradeStation. Now, let me see if I can get it in this view. These are daily, weekly. You can see on the daily the major pullback after hours. Yeah, that's what I was afraid of. It doesn't like the futures, but I was going to look at. So you can see, let me go back to this screen that I was looking at. I apologize for that. You can see just a major flush from 1440-ish down to 1390. So that was a 50-point drop. But you also know what happened is there was a lot of repair over the night, and the market ended up opening up here. And essentially, if you look at these trade in a trading range between the support and the resistance defined here, so the big sell-off was over by the time the market opened. Now, unfortunately, based upon past experience, what I expect is going to happen now is we'll continue to see a drift down and probably test these lows before we bounce. But you know, as we're seeing today, this evening, with futures being weak, -4, you know, there's still some downward pressure on the market. And again, as I was just saying, it would not shock me to see us drift down lower over the next few days. Now, we also know that all it takes is some talking head to get on CNBC tomorrow morning and say that Boehner and the President spoke all weekend and they'll be coming back on Thursday to vote on a compromised bill, in which case the market goes up 50 points on the S&Ps. So I think we have to be careful, and we're not out of the woods by any means, but I think this tells me that if there's going to be a lot of knee-jerk reactions, unfortunately this knee-jerk occurred after hours where most of us on the individual side hopefully did not get overly hurt. You know, I like to really spend a lot of time looking at the market itself, because when I look at my portfolio at the end of the week or at the end of the day, the most important thing that determines my performance is how good the market did. And so I'm going to look at the top-down view, and I'm going to look at the major market indices. I'm going to come down to Woodward and Brown, the major markets plus. So top-down, those who've been here before, is all technical price performance, heavily weighting the last several days, but looking at least 2 or 3 weeks performance. So the strength is not the thing that you want to see the top if you're long the market, and you could see that the highest ranking indice going into Monday is the VIX, and the VIX had a 5-day performance of nearly 5%. Remember, the S&P was up about 1.2%. We look at the chart of the VIX, and again, the VIX is not your friend if you are long the market. The VIX is your friend if you're short, if you're buying one of the ETFs. Increasing volatility might be associated with weakness of the market. We have been waiting to see whether or not we could break through this descending 200-day moving average and frankly and hold. And one can see that the VIX did open up extremely high with the overnight volatility on Friday, but traded lower the entire day. It'll be interesting here to see whether or not that 200-day moving average, which had been resistance for so long on the way down, becomes support. And for those that are interested in the market going down and increasing volatility, if the VIX can hold above the 200, build a base, and go up again, that would be extremely constructive. The other thing that is anti the market is the dollar. And the dollar, saw some mixed signals last week, but clearly the dollar had a very strong day on Friday with a pivot up, a big kahuna, and some volume coming in. These are the UUP dollar bullish power shares. The dollar has been opposite of the market, and like the VIX, the dollar has failed at the 200-day moving average. It will have to get above the 50 and move up here to convince me that it's making a rebound. And there's a lot of folks, I heard a lot of talking heads that said the strength in the dollar was short-lived and give a chance to buy some euros at a discount. So the dollar and the VIX are counter to a strong market. And so since they both had good days on Friday, it tells you what the overall market did would go the opposite way. Now looking up here, you could also see that the small caps have strength over some of the larger stocks, S&P 500s and 100s down here, and NASDAQ weak, and then gold and silver very weak. So let's take a look at gold and silver. And again, strong dollar, weak gold and silver, and you could see gold has broken through its 200-day moving average here on the spiders. Now, this could be an early reversal pattern here, and a couple of gold stocks, specifically Newmont Mining, I thought looked interesting if they've been trading down to some support levels. And silver, which behaves similarly, you could see, again, a deep pullback on Thursday and Friday as well. From a market perspective, I usually look at the Dow, the NASDAQ, the S&P 500, and then to get a better gestalt overall, look at the NYSE and the S&P 1500. So let's start with the NYSE. This is a index that's large, that has big, small, and medium stocks on the New York Stock Exchange on it. And you could see it's been in a very nice up move. So when we met last Sunday, it's Friday, Thursday, Wednesday, Tuesday, Monday, we were sitting here after a shallow pullback to the 8-day exponential moving average, and I was lukewarm as to what to expect, and we had a nice pop off that moving average, although we did pull back to it on Friday. So as we know, there was a modest move up in the market. These are some momentum indicators, and I like to buy pullbacks, and pullbacks would be when the long one, the weekly or the 13-day, are green, and the short one, the 2-day force, and the daily for bongos go red. So I like to buy pullbacks. We already mentioned before that pullbacks were some of the things that were working the best in the market this week. So volume came in on Friday. It was option expiration, which is probably cause of the volume. A lot of pocket pivots to the downside. Now, a pocket pivot is related to interaction with the 10, 50-day moving averages, I believe. I think the 20 might count as well. And higher volume if you're going on a pocket pivot up than the prior 10 days highest volume down on a down day. Pocket pivot downs have not been validated by Gil Morales and Chris Katcher, who, by the way, their new book is out. Excellent read. But we track them in HGSI, but they're not validated. Since the market opened up down and traded down most of the day, even though it came back up close to the prior close, big volume because options expiration. There's a lot of pocket pivots down on Friday that probably don't mean as much. The S&P 500, a bunch of large stocks, not nearly as strong from the perspective of a big move off of the moving averages, but pull back into this congestion area here where the 8-day and the 17, the 50 and the 200. So it would be nice to see this hold here. I'd like to see them break above the moving average, pull back, have resistance, now turn into support and move off of that. We probably are at risk of retesting that 50-day moving average at least early in the morning tomorrow, unless there's a turn overnight. The NASDAQ, predominantly small stocks. Same type of a pattern, sort of hard pullback on Friday, pocket pivot down, huge volume, testing here now this confluence of the 50 and the 200-day moving average. This would be a natural place to bounce soon. A deep cut here beneath these moving averages, and you can see there's no lines underneath to act as support, so you could see a substantial pullback. The S&P 1500, which is a mixture of the 400, which are mid, the 600 small, the 500 that are large, a little bit healthier, pulled back to the 17, closed quite a bit above it at the 8-day, 50 here, 200 down here. As you can see, unlike the prior, there's a number of natural places for this to stop falling, and we'll see if it pulls back to this 50 before it runs again or not. So the indices all have pulled back some. For the most part, there's some support underneath, probably critical support. It'll be interesting to see how we do on Monday and Tuesday this week, or at least Monday because Tuesday's Christmas Day. Oil has been quite bearish, trading under the 200-day moving average, struggling to get above the 50-day moving average, closed pretty much right upon it on Friday, and certainly a weak spot in the market right now. So strength and volatility in the dollar, small caps, look at the Russell 2000, appearing to be stronger than the larger stocks, and you could see that hardly any pullback at all, still above the 8-day moving average, the 17 also trending up, and the 50 looks like it wants to turn up as well. Clearly this is the strongest of the indices that we've looked at thus far today, and in fact if one goes from the low here to the high on Friday, in 24 trading periods, the small stocks have been up over 11%. So this is where the strength in the market is, and again, would not be shocked to see these things all open down, retest some support, and then hopefully hold and bounce. Things will be very much news-driven. So I haven't gotten very excited about the market. Frankly, these futures are not that bad. In fact, they continue to improve. And it'd be interesting to see, again, if this low here that occurred in the middle of the night, unfortunately didn't hurt most of us private investors, mostly because we don't trade this in the middle of the night, except for David Ghilardi. Hopefully, maybe this was the sell-off, and maybe now we've got a trading range until we break one way or the other. Looking at Elder, and to get an idea of what Elder tells us about this market, let's take a look at the NASDAQ within Elder. And I look at the NASDAQ because, frankly, it most closely reflects what I do. And, in fact, let's just play a little bit here. You take this down to a, as you could see, open up a little data box. Where is that data box? So this was at 9:35 on Thursday, is when the market flushed. And it opened down, actually this is beginning of the market day, I'm sorry. But you can see the NASDAQ opened down and then pretty much traded up, pulled back, and then traded up the rest of the night, ending with a green candle. Now, I don't usually look at 5-minute charts on Elder, so let me go back to the daily here. And for those who've been here before know that when I look at Elder, I like to buy when I see green and blue, sell when I see red or blue. We got a blue candle or a blue daily bar on Friday, closing near the high of the bar, green on the weekly, blue on the monthly. So the NASDAQ is far from broken, and we can see how far we've come up since on the middle of November already. So, very ugly day, but far from a broken market. So, I'm not nervous, but I'm hoping that the big flush already has occurred, and we'll see if those futures don't make up some ground before the day is over. Now, the other thing that I've noticed as a positive, perhaps, of the fiscal cliff, there's been a lot of M&A activity over the last week or so, and I think people are trying to get their capital gains from selling an appreciated company in the 2012 versus the 2013. Now, if you own something called Greenbrier, and I add some of that, you see what happens when your board says no. Your stock goes from 20 to 21 with a $22 buyout, and you say no, and it drops down to 16. That was rather painful. If you look at industry, see in HGSI we have 145 different industry groups. This is top down, but this is kind of long if it's 2 or 3 weeks worth of time being considered. I like to look at a 2-day force to know what's working right now, and that 145 becomes 17. So right away you notice most of the groups did not make it to the 2-day force up. If you look at the down, you'll see quite a few more at 83. So again, a sign of weakness in the market, and some of my favorite groups, unfortunately, are sitting there. Hard to believe I made money this week seeing that. A couple of comments about what I see here, and we'll look at a couple of these. Casino and gaming. There have been a number of, there's been some M&A activity in this group, as well as some big dividends paid out, which have caused some big moments here. Now, I don't know Ameristar Casinos, I did look at it last week. I don't know if I looked at it on the call, and I passed on it. That was obviously a mistake. Earnings coming and going. So I might go to the web here because I'm curious what happened to this stock. Right-click, go to the web, look at FinViz, and it'll tell me Pinnacle to buy. So there's some of your mergers and acquisition. So Pinnacle traded up as well with the acquisition. MGM, these stocks have been a nice move off the bottom. Everything is green here. I don't like this one because it doesn't make any money. None of these really are stocks that I own. I have some Las Vegas Sands that I've had for a while, which also paid a big dividend. But a nice move in a couple of these, but I think this group is up because of the takeout of Ameristar by Pinnacle. Automobile manufacturers, Government Motors made some comments about the government getting rid of their remaining stake and being an independent company again, and that caused a pop. I love moving averages because they give you opportunities. Pull back to the 50, it went up. Pull back to the 50, went up. Well, here was a pullback to the 50 again. On Tuesday, a big move off the 50, and I believe with a kahuna on that day, so that should have drove awareness. A little bit of a pullback on Wednesday and Thursday. Friday with a nice strong close. Government Motors looking great. Ford's been also another great performer. In fact, if one looks at performance off the lows. Now, when I used to look at these charts, I'd say it's too late. HGSI just tells me what used to work. We've done some analysis, and things continue to work. So 97 days up 35%. Not sure why I wouldn't expect this to continue to go up. Good volume on Friday, pocket pivots, kahunas within the last week. If you look at a long-term chart, and I only go back here to 11 in this view, but you can see it could still make quite a bit of run from 12 up to 18 before it starts to even test the 2-year highs. So perhaps a lot to like in the automobile industry. Home building has been the strength of this market, as well as some ping pong stocks. I mentioned Hovnanian was the stock of the week last week, up 35%. And KB, I think, had earnings. Did Hovnanian have earnings? And those that follow John Booth, this is one of his picks this week. Doesn't really tell me. I'd have to do more reading. I can tell you that there were some good home building numbers for some of the stocks that came out, and this is an industry that's been very strong. Hovnanian is one of the cheapest of the group, have not yet turned around profitability, but I believe, let me check my MarketSmith off screen. MarketSmith off screen will tell me what the earnings projections are for next year, and it has them making a penny in 13, making 50 cents in 2014. No shocker that this stock is starting to take off with great earnings per share growth coming in as a turnaround play. Look at M&I Homes. You know, this thing's a little bit extended, although the high jump bar is not at the top. Look at the earnings per share growth coming into this stock here. And if you look at it, it trades at a multiple that's high, 91, but with a growth rate of substantially higher than that. So a lot of strength in home building continues. It's been a very nice group for some time. Don't know what diversified support is. NYSE buyout, you know, NYSE being bought by ICE. That will drive that one. Construction materials, to me this is sort of a ping-pong effect from the strength in in the home building industry. Things like Sherwin-Williams paint, Trex, Eagle, which is cement, all made my big watch list. I don't know what Headwaters does. It is a concrete products except block and brick. Home improvement, energy, construction. You know, is it breaking out over recent highs? Potentially, it looks like it's going out. Could be breaking into all-time high territory here, but doesn't make money. So I probably would say nice-looking chart and pass. Pull back to the 50 at a pocket pivot and a Kahuna volume coming in. This might be something where you take off. I like stocks that make money. So for those who haven't been here, this is what I do on my own. I go through most of the list, and then I look at some of the down stocks as well. Auto parts stocks, you know, if the Ford Motor and GM are doing well, at some point some of these are going to do nicely as well. Johnson Controls, you know, deep pullback, bunch of pocket pivots this week. Everything turned green, makes money, although no growth in earnings. Borg Warner is another one that makes a lot of money, trades at a PE that's 14, no dividend. I worry about this stock because it's going to see some resistance here at the 200-day moving average. If I look at the other way now, let's go, hold on, go back, and let's look at what wasn't working this week. Pharmaceuticals had a very tough week. I have Abbott. I don't see it on the list. We'll take a look at it later. But you can see why Merck, you know, these stocks have been darlings because of some nice dividends. And you can see here, dividends up to 4.1% with a PE of 10 and a pretty dramatic pullback to the 200. You know, it's hard for me to figure out whether these guys are winners or losers with Health Care Affordability Accountability Act, also known as Obamacare. As it sits right now, there will be some concessions that Big Pharma makes and Bio makes, but the excess volume should help them, and there are very few price controls, if any, in the bill. Merck pulling back, that means Pfizer's probably doing the same thing. Not nearly as bad, so you might see a bounce off this 50-day moving average. Worst case, you pull down to the 200, which would be only a couple bucks down, and you could see trades at a 3.5% dividend yield. J&J, these are all stocks over the last couple of weeks have been some of the stronger stocks that we've looked at. Take a quick look at that one and see, again, it looks just like Pfizer pulling back to the 50-day moving average. No earnings per share growth in these companies, which is what makes me nervous with them, but nice dividend yields. Weak this week, but have been leaders. Anything else in here pops up? A lot of what have been good companies, but obviously a bad week in the big pharma sector. Semiconductors have been weak. We'll take a look at the first three here. Micron is a stock I love to hate. It got above the 200-day moving average, rapidly pulled back. It did not become resist our support. It broke through on a huge volume day. That's a pretty ugly looking chart. Intel has been in a downtrend. Actually, we called it here on one of these calls back in August. Did get above the 50 and then closed below it on Friday. Certainly an area that you might expect Intel to turn around. It pays a whopping 4.3% dividend. It too does not have any current earnings per share growth. First Solar is another one that seems to be trying to make a turnaround. This is a stock that has fallen from grace. It used to be a $100 plus stock. It fell down to 15. It's had a nice move from there if you were smart enough to get in. Unlike the others, it has huge earnings per share growth coming in and is still in a really bullish thing, pulling back to the 17-day moving average. A bounce here would be very attractive to me. What else is weak? The next one is probably financials. As I've said before, because of volume, you can see the volume in this group is so big. This group is always near the top. If the stocks moved up, they're on the other list. If they moved down, they're on this list. And we looked at these as being some of the leaders last week. Bank of America, and you could see still looks pretty good, although had a tough day on Friday, had an inside day, some recovery as the day went on. Citigroup, again, compare these to the semiconductors. These are all trading well above their 200-day moving average, in an uptrend above their 50. You've got an 8-day exponential here, perhaps a support, a 17, a 15, a 20-day simple. These are still very strong looking. JP Morgan, although my favorite of the group, did not look as attractive last week when we looked, but looks quite good, moving up now. Again, a tough day on Friday, but not the end of the world. These are near the top of the list because of their volume, not because of massive movement down. Take a look at biotech and steel, because we've been seeing a lot of these over the last couple of weeks, and these have been some of my favorites. Obviously, there's been a sell-off in a lot of them. One-day performance, the worst one, I don't know what Cyclacel does, down 9%. 5-day behavior, they were actually pretty strong, as you could see here. Some of them were up over 5 days, even though they made it into the bad list. So the worst of the, Amgen, well, I won't say the worst of the bunch. These are some of the bigger of the bunch. Pulling back looks just like Pfizer does in it to their 50-day moving average. All my momentum indicators have turned red. Unlike Pfizer, there are some earnings growth into this company. Their pipeline looks attractive, I could tell you that. Spoke with an analyst friend of mine this week. Multiple looks like Pfizer, pays a small dividend, not as much as Pfizer. Could be getting a good this market turns around from here. If not, look out for that 200-day moving average. Gilead Sciences, another leader, this one mostly in the hepatitis C business, has some earnings coming into the stock, not this quarter, but next. They give you an opportunity to buy it off the 50-day moving average. I look for these things to come down, hold at the 50, and then what would get me excited would be if I saw a pocket pivot on some volume, perhaps a kahuna, but I look for a signal. Arena, if you look at Vivus, Arena is similar, just a little bit behind. Those are two companies that had obesity drugs approved recently. This one is not yet on the market. They're working through some issues with the FDA from a label perspective, but this should be out there soon. When their drug gets on the market, it'll be marketed by a company called Eisai, which is a Japanese pharma company. Nothing too exciting here, but you put this on your list to look for a bounce, because when the smart drug comes on the market, there's an opportunity there. Medivation pulling back down to the 50, and as you can see on the way up, there were a lot of great buying opportunities off the 50. It stubbed its toes after the drug was approved here. Doesn't make money yet. Be interesting to see if it bounces there. Are there any of my favorites sitting here? I'm sure there are. We'll look at Celgene, and we'll look at Ariad. Celgene is kind of basing here, 8-day and the 17 coming together, had a hammer here on Friday. I think the stock runs again. It makes earnings, grows earnings, although it acts like a big pharma, doesn't pay a dividend, trades at a multiple of 19. Amgen, Gilead, and Celgene are the best of the biotech from a big company perspective. This one may have the stock that's most likely to bounce here. I want to look, what did I say? Ariad is one that I recommended on the board. It ran up very quickly in the same day. So let's go look at Ariad on a daily chart. not on a daily, intraday chart. So. Oh, it's not AR. Sorry about that. ARIA 907, probably about 8 more minutes. And let's make this into a. This is very remarkable. On this date, the drug got approved, and they'd run up quite a bit. And then 15 minutes later, after a high, you had a red candle high, and it sold off hard from here. And because when they looked at what the FDA approved, they put in some warnings that I think are overkill. I came in on the board and said, I'm buying this stock now because I think the label is not appropriate, or is not going to be, excuse me, not, I didn't say not appropriate. I thought that the label was not going to keep people from using it. There was a bounce. I got stopped out. I bought some 20 calls as well when the stock dropped down in the 19s. And it's had a gradual pullback, retested, and it's had a gradual move up and then a sideways move. I'm still a big believer in this company. The product, I think, will be a category leader, but it's obviously not moving anywhere anytime soon. And depending on when you bought it after I put out my recommendation, you either hate me or you like me. This has got will probably hold, I bet, as support unless the overall market just caves, in which case God only knows what will happen. You may have noticed I had their website open. This one made one of my watch lists, and I'm a sucker for earnings. And it's got earnings coming into the stock, so a lot of earnings per share growth. It trades at a multiple of 70, doesn't pay a dividend. It's a small stock with a cap of 200 million, so it's probably too small for most folks. But it's an interesting company. It's had a big move off the bottom. Again, I like buying stocks that are young, that start to become profitable, and you might want to learn more about Repligen. I'm not giving it a buy rating except to say sort of a cup, handle. Is it going to take off? Be interesting to see. All right, I'm getting tired of doing the top down. We'll look at steel, and then we're going to go and take a look at some other things very quickly. These were winners last week. I talked about the China effect. You can see all of them were down, up to 5% down. On Friday, if you look at 5-day performance, on the other hand, they pretty much were up for the 5 days. So steel was up 2.22%. We'll take a look at Cliffs in U.S. Steel very quickly. Cliff is a mostly coal and iron ore company. It used to be called Cleveland Cliffs. And it sort of did what I expected. It pulled up to the 50-day moving average, which became resistance. And if it can get above this 50, it might get all the way back up to the 200-day moving average. If it fails here, it's an ice hole failure, and it'll probably take out the 28.5 area, which would be its most recent low. U.S. Steel broke above. So I have a doji here. I'm looking for this to open up if the market firms up overnight. I like this stock if there's a turnaround, but it's at risk of, it will fail as well if the market does not move up. And I would not let it get much below the 200-day moving average before I ran from my position in this stock. All right, enough of the top-down approach. Let's take a look at a couple of other goodies that I've done this week, and then we'll say goodnight. Now, I put this up last time. I told people if you want to freeze it to see my list of stocks, go ahead. These are the stocks that made my list this week. And so what I do is I start with a list of probably 8,000 stocks. I look at a number of different scans and search criteria, and then I look at charts. I take these and I put them into some auto trading programs I have, and then I will look at them as the week goes on, certainly Monday and Tuesday, and look for breakouts, opening range breakouts and failures. And I also look at things called red candle high and green candle lows as potential turnaround signals. So let me look at a couple of the stocks that I saw, and then I'll say goodbye. pull up my buy list, and we're going to go into today, buy watch. And you'll notice that I break my buys out into different criteria, because sometimes some criteria work better than others. We've looked at Hovanian Enterprises and M&I Homes. Here, this was a gaming stock that caught my eyes, MGAM. Why do I like this? Because it makes money. The earnings are slowing. Pull back to a major moving average, a 200-day moving average. Had a big move up on, or big volume on Friday. A green candle, although it had a loss for the day because it gapped down. I like this because I know it's likely not going to fall much below that 200-day moving average. I don't like it because I'm concerned about how long it takes to get above the 50-day moving average, but I'll probably watch this stock and see if it can get above that 50 and hold and give me a signal to get into it. On Assignment is a stock that traded up and has gone sideways. And the nice thing is when a stock goes sideways, some of the excess exuberance goes away. And you could see, although it didn't hit the top of the high jump bar, once it got high, the stock has gone sideways, the high jump bar has come down. And now if you've got a squeeze here with the 8-day exponential, the 17 and the 50-day simple moving averages, you had a pocket pivot up on a down day on Friday with a lot of volume, makes money, growing its earnings, trades at multiple 20 with a growth rate above 30. That's a kind of stock that I like, and if it traded above the high here, I might be interested in getting into it. Conn's is a home improvement and electronics store. I think this is one of those stocks that's doing well because of the home recovery. It's also probably doing well because of the demise of Circuit City and other home improvement and appliance stores. Now, obviously, Best Buy has not done well, but this stock has earnings per share growth, trades at a multiple of 21, does not pay a dividend, has about $1 billion market cap, and has had a very nice move up. We've talked about it multiple times. It'll continue to move up until it stops. Questor has been a scary stock. It gets taken down on news from the short sellers, so you buy this thing at your own risk. What I like about it is it's had fairly robust earnings per share growth, although it looks like it's slowing down. Multiple of 11, pays a small dividend of 2.7%. You notice all my momentum indicators turn green with a bunch of pocket pivots. I suspect this guy runs up to $37, $38, and then be interested to see them get above the 200. That's a 20% gain in a short period of time. I like Questor with the caveat that it's kind of like that game with my kids that what's it called, the little animal. The mole pops its head up and somebody pounds it down. Well, this is the mole and the analyst pop its head down. 3D Systems is one of these lower left to upper rights making money. It's had kind of loose here compared to back here with some pretty substantial pullbacks, making highs, all green here. Louisiana Pacific is another stock like U.S. Gypsum that trades consistent with the home building. They make lumber, make houses. You need to have wood. Everything is green. A pocket pivot on Friday on volume. Lower left, upper right, getting near extension time. The high jump getting high. Huge earnings per share growth. Relatively cheap stock. It used to be a lot cheaper. Probably goes higher. CVR, this is one we talked about last week and multiple other times. This is one of the refiners, although this one has an ethanol-related business as well. So it might have some issues with subsidies if they went away. It's getting extended off its 50-day moving average, which is when you clearly want to buy this stock. Everything is green, huge earnings per share growth. Certainly a leader in the refiner world, which is still doing quite well this week. Terex had a tough week on Friday, but it's pulled back to the 17, closed up almost at break even for the day, down less than 15 cents. In an uptrend, these guys make trucks, tractors, trailers, and stack for manufacturing of machines. Construction business may benefit from that. That's Terex. Eagle Materials, this is the cement makers. Is that a beautiful chart or not? I put this thing up here every week for the last 2 months. If you don't own it, shame on you, because you've had opportunities, several of them pullbacks. You might want to wait for your next one. Great earnings per share growth. Trades at a multiple of 50. Teeny weeny dividend less than 1%. Continues to be a very nice performer. Toll Brothers is one of the housing stocks that pulled back pretty deep. Struggling to get above its 50. You can see it's been resistant several times. Probably would like to watch this, but would like to see it get above the 200-day before I give it any time of day. You notice the group strength is so high. Some of these we've seen already. Here's one I like, Sherwin Paint. I think this was in the index we created back in October in HGS land, and again, previous to that in March. And this is a lower left to upper right, certainly going sideways right now with the market struggling. Makes money, trades at a multiple of about 24, pays a small dividend, and clear is related to recovery in the housing industry and home improvement. I like buying things on the 50. Now, I don't know if it's going to go sideways for a month or if it's going to pop in 3 days, so I would look for a reason to buy. Those could be what's called a red candle low. I mean, a green candle low. It could be a kahuna. It could be a pocket pivot. So again, these are some of the stocks that I found cautious for the market. I've been watching closely the futures overnight to see where they end up. Continuing to be a little bit down, but not horribly down, and not the flush that we saw earlier in the week. Lastly, one of the things that I do, I mentioned red candle lows and green candle highs. These are fairly easy to program, and one of the things that I do is I run throughout the day scans in TradeStation, and I'm looking for stocks that meet certain criteria, and I actually had this program for me, so I can go throughout the day, and we look at, just to close it up, some of the things that I'm doing during the day is I'm tracking. I have a different resolution when I do this during the day. I try to make this tighter resolution, make it easier on your eyes at night. But I'm tracking a number of things in my radar screen and TradeStation. Here's the S&P 500, looking for green candle lows throughout the day, red candle highs. So a green candle low is telling me, it might represent the end of a downtrend. So I'm putting a little dot for the green candle low, and I'm going to see it show up here. And I like to fish in these stocks. You can see some here that had green candle lows on Friday. These can be a reversal sign. Red candle highs are the equivalent of a bearish sign. So after you've had a run, if you think about it, you got a stock, it's going, oh, look at the S&P 500, it's going up, it's going up, it's going up. You don't expect them to have a red candle high that's higher than any of, I don't like the way that looks like. You don't expect them to have a red candle high that, so take out a new high of recent, I think, 20 days, and then trade down from that open to get a red candle. So if you have set a high on a bar, and then you close lower than where you open and get a red candle, that might represent a failure and an opportunity for shorting. ISO failure is something I learned from David Elliott, and this would be a stock that's going to fail at the 50-day moving average here in yellow, and these have a tendency, if they fail, to drop. So getting an idea of during the day what's failing at the 50 might be a useful thing of finding things to short. As you can see that. I look at MOBO breakouts and breakdowns, again, trying to find stocks that are giving me a buy signal. Now, Abbott, as you know previously, is one that I own. And unlike Pfizer and the others, it's actually breaking out above the moving averages. Pays a nice dividend as well. MOBO breakdowns, again from David Elliott, shouldn't be green, there you go, are stocks that are breaking down, frankly, and breaking below some major moving averages. And you can see Apple breaking down. And then I look for stocks that are squeezing, and especially if I can find a green candle high, or make a green candle low, and a stock that's squeezing, then I have a stock that might be setting up like a spring, where it's basing here, set a green candle low, and might be giving me signals that it's ready to pop. I can look at those intra-bar, intraday. I can look at them as end of the day, and that's some of the things that I use to help my trading. So on that note, it's 9:22. Going a little bit longer than I wanted to, but again, happy holidays to my Jewish colleagues. It's Hanukkah's come and gone, but Happy New Year to come. And to my non-Jewish friends, Merry Christmas, Feliz Navidad. Have a safe and a healthy one, and we'll see you all next week. Just the last couple of housekeeping. One, I will be posting this also to a YouTube site with links provided on several boards, so you can download it in a better resolution. If you're watching this on YouTube, you contact me at my email address, which is on the original slide. I'll put it back up here, and I can add you to a list for that if you're not on one of the boards. I will hope to put up an interview, a basic HGSI webinar during the week, which will let folks who are new to this understand what kahunas and bongos are. And I'm going to talk to George Roberts about the next week or two, doing a live in the market or aftermarket session where you can interact and tell me things and ask me questions. So on that note, I say good night.